Hi, it's Darin Eppich. Welcome back to my YouTube channel. Today we're gonna talk about what the F is happening in Los Angeles real estate market. The country for the most part, but LA is definitely a unique case. I'm a realtor here, and we're gonna kind of give you 5 key takeaways from the first quarter of 2022 for Los Angeles real estate market. Yeah, so far it's been a hot seller's market, and we're going to kind of dive in and give you kind of why. We've talked about this a few times, but we're going to give you kind of a little more dive in as well, a few stats, as well as at the end talk about the hottest markets, which is one of the 5 key takeaways. So that way you guys are prepared for when you guys come into this market as a buyer or seller, what to expect. If you like the content you see today, please like my video. If there is something you want to learn more about, please reach out to me. My information is down below. If you haven't subscribed yet, please subscribe. Videos every week, mostly about Los Angeles and real estate. Every once in a while, some fun things, but I love your feedback because I do this for you guys, and I'd love to help you guys. Now moving on to, as stated, present the 5 key takeaways from the first quarter of the Los Angeles real estate market in 2022. And we're gonna kind of give you some tips or a little insight at the end of each talking point, advice, like what experts are saying, and just go from there. And then I'll do my final thoughts. Moving on to number 1, it's a hot AF seller's market. Housing inventory is at historic lows. March 2022, a little over 5,500 homes are active. And these are recent stats. To a year ago, we had over 7,300 homes in LA that were available to purchase. I'm talking about single family homes, not condos, single family homes, just so you know. I had a lender today in our meeting tell us that there's like an average of like 5 buyers to every home. So that's what's driving prices up. It's simple supply and demand. We don't have the inventory. Like I said, inventory is a part of one of the factors why it's such a seller's market. Sellers know that there's so many buyers per house. So they kind of, drive the price up or get more over asking. And it's going to keep going that way. Everyone predicts that housing prices, even though they talk about somewhat of a recession coming, a lot of economists don't believe that housing will be impacted, even with rising interest rates. And we'll talk about that here in a second. Like I said, experts say it's not going to get much better. If you want to own a property and build equity, I suggest you start working at it. If you keep thinking the prices are gonna get better, I have buyers that were like looking at 2020, then they said 2021, then they said the beginning of this year, it's probably cost them at least $200,000 in equity. And I'm not saying that's gonna keep going that erratic. Even though it's a seller's market, if you wanna buy, just buy. Just go for it. Figure it out. Problem solve. Take a chance. Number 2, interest rates are heading to 5%. So they've already climbed over 4% this year. I think we had someone just tell us, or beginning of the year they were at 3.5, end of last year 3.25. Now they're over 4. They're headed towards 5. The Fed is going to keep hiking interest rates. They say there's going to be 6 more. The last I heard, maybe 5 more, but I think it's 6 more. We're at about, depending on who you talk to, 4.25 to 4.5. They say soon it'll be over 5%. I don't know where we're going to end up, but we are still over the 30-year period historic lows. I think in 2008 we were over 6.5 or 6.5% at that time, and that was considered great then. Fast forward to 2022, because people got spoiled. A lot of people think that interest rates are getting high, and they're not. They're really not. If you ask our parents or people much older than us, they'll tell you they've seen interest rates a lot higher than where they're at right now. So I think a lot of people need to get that out of their head. But it is a key takeaway. It is driving the market. In the beginning of the year, people heard about interest rates going up, so they panicked. They're like, oh, I gotta buy. That's where you saw these crazy bidding wars. And then you also saw a lot of cash people come in, or people that got hard money loans. All I can say is interest rates are gonna keep going up. There is talk about at the end of the year, beginning of next year, interest rates coming back down. They're just countering inflation right now. They're trying to bring that down. That's what they do. The Fed does to counter it. They raise rates. So there'll be refi opportunities. So a lot of people, I think buyers especially, should get the number out of their head that it's too high now. There's a lot of talks that they will eventually drop the rates again once they counter inflation. There's no crystal ball, there's no guarantee, but I mean, every single person is telling this story. Every economist, every lender, I'm hearing this from everyone. That should give you some insight. So I think if you're a buyer, you should look at the property and think about purchase prices going up versus interest rates continue to rise. Because you will have an opportunity to refi. At least that's what they're saying. Number 3, cash is king. Probably the most magical thing that's been happening this year in the LA real estate market is, especially with the prices we have, you're seeing a lot of cash offers. It feels like 1 in every 3 offers, or a third of the offers on a property, are cash. And I feel like they're doing that because there are a lot of investors coming out because they realize prices are going up, so they can do a flip, or they can do this, or they can just get equity in a year. because some people have done it. And then also some people are just looking at it as like, oh, buy this property and have it as a passive income rental property. Or there's more people in LA than I thought that had a lot of money. I mean, it's already one of the most expensive cities in the country, the world, and there's a lot of rich people here. So maybe it should be no surprise that many offers are coming in with cash. We do think there could be some people coming from crypto that have converted to cash. We do think people are doing hard money possibly. We've been trying to figure out why there's so many with cash offers or willing to throw cash at the properties. Those are some ideas. And they're winning a lot. That's the thing. And so there are ways to be competitive, and we will discuss that later. But hard money is one of them. But contingencies and terms, those can help you as well. It's hard to beat a cash offer, especially when they're removing appraisal and loan. They just have to go through inspections and they can close fast. It can be tough. I don't know if they're going to keep being a third of the buyer population or offers that go in. But right now, the story of Q1, besides inventory and interest rates spiking, is cash offers. We'll see what happens in the next coming up months. But right now, cash is definitely king. And usually it was not the case even last year. I was able to beat out cash offers pretty consistently, but it can be tough. So number 4, buyer's fatigue. It's happening this year. Buyer's fatigue is simple. Buying a property is emotionally and physically draining. You go through an emotional roller coaster, more emotionally than physically, but it's still physically demanding to go to properties and find time between your crazy work schedule, etc. Especially in LA, you're also battling traffic, but emotionally it's draining for a lot of people. You think you're gonna get a property, you're close, you come up with a $1.2 million cash offer, and then you find out there's 35 offers ahead of you or 35 offers in the mix. It's emotionally debilitating, draining. I, as a realtor, have worked really hard to try to eliminate the risk, increase the opportunities of success. But you still, I've still experienced it this year. I mean, one couple in particular, they were throwing out offers left and right. I initially was like, hey, maybe we should just find you a place to rent and then go into it. And that way we're not rushed, and that way we don't have to throw offers at every single place, that every place we see every week. Because it is, even writing an offer for people, that's emotionally draining. It's taxing. It's taxing on everyone involved, the lender, the realtor, everyone, even cash. But I always tell people, maybe take a break, take a couple weeks off, reset, reconfigure. There's nothing wrong with that. It is competitive. LA is competitive. It's an alpha city, just like New York, San Francisco, Tokyo, etc. It's a crazy market, especially this year. It started off really crazy. So a lot of people that started in January, if they didn't pull the trigger or find a place by mid-March, I noticed a couple people decided let's take a break. And that's totally fine. But I want buyers to know that get buyer's fatigue. Everyone says you should stick with it because the prices are going to keep going up. And what we would hate to happen is you to lose out on the opportunity or get priced out of a market. And rent's not going any lower here in LA as well. So, you might as well purchase a property if you can do so. I would say, just so you know, probably 1 in 5 get buyer's fatigue. It does happen. I never experienced it until this year. But, I get it. It's tough out there. Will it get better? Yeah, with rates increasing, with inventory increasing, I think it'll be not as competitive for buyers. The opportunity to get buyer's fatigue will be reduced. But at the beginning of this year, I don't blame any buyers for pulling out. It was pretty wild. But keep in mind, LA is a very competitive market. It's always going to be competitive. It's been since I started. This year is just on another level. Number 5, the hottest markets in Los Angeles so far in 2022. And I did this based on using the MLS, which is the service we have in California, or Los Angeles, if you will. And I went through all the different areas, and it's been interesting because I went off of sold in the first quarter, numbers of sold. Pasadena, 217 single-family home sales, average $1.73 million per house. And then you did about $834 per square foot. They had way more homes sold than any other area in the first quarter. It tells you people are moving northeast. Then number 2, Woodland Hills. Doesn't surprise me at all because I've been looking for a lot of people in Woodland Hills. You had 171 home sales, single-family home sales in the first quarter. Average was $1.435 million, little over $659 a square foot. Woodland Hills, same thing. A lot of people selling there, a lot of people looking to buy there. More value. That's the valley. A few of these are the valley on this list. And then you have Burbank, which is also northeast LA technically, or on the way to, in that part of LA. Burbank had 143 home sales in the first quarter. Average home sale price was $1.2 $344 million. Average square foot price was $828. They're not that big of homes in Burbank, a lot of them. They're more boxy. But Burbank is a very clean, well taken care of city. And that's also Northeast LA, technically. Not as far northeast as Pasadena, but it's up there. Number 4, South LA or Park Hills Heights. It's an area in the MLS, and they had 131 home sales. This place, the last couple of years, since Inglewood SoFi Stadium, has popped. And more people are buying there. Average home sale price was $1.118 million and about $676 per square foot. And then number 5, which kind of surprised me, to be honest with you. It's very desirable, has been for a long time, but Sunset Strip, Hollywood Hills. Basically, the Hollywood Hills, just north of the Sunset Strip, had 125 home sales. Average home sale price was by far the highest in this group, $3.17 million and about almost $1,100 a square foot. Kind of wrap this all up. I will here in a second, but final thoughts coming up. But Sunset Strip, Hollywood Hills kind of surprised me because that's a lot of home sales for up there. Northeast LA and the Valley does not surprise me. There was a number of places, Sherman Oaks, West Hills, Westlake Village, or Calabasas, Encino, Reseda. They're all like 80 home sales or above in the first quarter of this year, which does not surprise me because people are looking for value. Hence why they go out in the Valley or out to the Northeast. So this trend's been happening for a while. So final thoughts to wrap this all up. It's a seller's market. If you've been thinking about selling, I'd be surprised. Gotta give me a reason why you wouldn't sell in this market. Right now, inventory is still really low. As the summer and spring and fall come, we're gonna see a lot more inventory. You think you wait and you're gonna get more, you're probably gonna have less buyers per home. So you may not. Prices are gonna keep going up, but maybe not exponentially as the rate they have been. This first quarter, the sellers that did put their house on the market or beginning of this spring, they are gonna laugh to the bank. It's pretty wild. But for buyers, the prices are gonna keep going up, so they should be looking to buy as well anyways. Inventory has to get better. Rates and inventory keep going up. It'll level off. That's the prediction from a lot of experts. You're still gonna see home prices increase. Maybe not the rate they have this past quarter or moving forward, but it's definitely a seller's market. Keep that in mind. If you're a buyer coming into the marketplace, try to keep in mind the rates that are going up, but know that there'll be an opportunity to refi again. You gotta keep in mind it's gonna be competitive. You may not win the first couple offers, but don't let that discourage you, because ultimately if you do get a home, you are gonna build equity. In LA over the course of, I think, 30 years, the average, increase or appreciation every year has been about an average of 8 to 10%, usually closer to 10% every year. And that's not even including what happened this year so far and last year. People that bought a year ago, they've already built a lot of equity. 2 years ago, got 40-50% in some areas. You just got to look at the long term and think about what it could do for you financially down the road. I hope this helps you understand how crazy the market is in the first quarter in LA, and I hope this gives you some insight to what to look forward to in the future. Take care, have a wonderful day, and for everyone that watched this video, thank you so much. Please subscribe, comment, give me some more insight to what you want to see in the future. Thank you so much. Goodbye.